Welcome to Exploring the Core Principles of J.L. Collins' influential book. A simple explanation for everyone wanting financial freedom. Imagine a world where personal finance isn't a complex maze, but a clear, straightforward path. J.L. Collins' The Simple Path to Wealth offers just that, stripping away jargon to reveal a route to financial independence accessible to anyone. Picture it as a series of heartfelt letters, distilling decades of wisdom. The big takeaway? True wealth isn't about fancy things. It's about freedom. The freedom to live life entirely on your own terms. Core principles. Collins boils down the often intimidating world of investing into three core principles. He makes it abundantly clear. You don't need a Wall Street background or an expensive advisor to manage your money effectively. Avoiding debt. The second crucial step is to avoid debt like the plague. Collins is unequivocal here. Consumer debt, especially high-interest credit card debt, is a relentless enemy of wealth building. It traps you, eroding future earnings and limiting your choices. Imagine trying to climb a mountain with a heavy backpack full of rocks. That's what debt feels like. The book champions shedding that burden swiftly and staying debt-free, creating a solid foundation for financial growth. Seeing friends struggle under constant credit card payments, feeling like they're running on a treadmill just to stay in place, really highlights how breaking free from that cycle truly unlocks financial agility. Cushion money. Beyond these core tenets, Collins introduces several other powerful ideas. He talks about FU money, which is basically enough savings to give you a strong financial cushion, enough to cover several months of expenses. This isn't just about security. It's about having the independence to walk away from a bad job, take a calculated career risk, or simply say no to situations that compromise your well-being without immediate financial panic. It's the ultimate confidence booster. Wealth stages and 4% rule. The book categorizes our financial journey into two key stages: wealth accumulation, while you're working and saving, and wealth preservation, when your earned income slows or stops and your investments provide income. As you transition into the preservation stage, it suggests incorporating bond index funds to add stability and smooth out the stock market's ride. Finally, for retirement, Collins introduces the 4% rule, suggesting you can safely withdraw about 4% of your investment portfolio each year without running out of money. This provides a clear, actionable target for how much you actually need to save for financial independence. Spending less. First, and most fundamentally, the path to wealth begins with a simple truth: spend less than you make. This isn't about deprivation or extreme minimalism. It's about building a consistent habit where your income comfortably outweighs your expenses, creating a surplus. For many, this clicked when they started tracking spending, not as a chore, but as a detective mission. You'd be surprised where those little daily habits like morning coffee runs or impulsive online purchases truly add up. By being more mindful, not necessarily cutting out everything fun, you find more money left over than you ever thought possible, which feels incredibly empowering. Investing in index funds. Once you've mastered those two, the third pillar comes into play. Invest in low-cost stock index funds. Forget trying to pick the next hot stock or paying hefty fees to a financial guru. Collins argues that the simplest, most effective strategy is to invest consistently in a broad market, low-cost index fund, like one that tracks the entire U.S. stock market. These funds offer diversification, spreading your money across many companies, and have historically delivered strong returns over the long haul with minimal effort and cost. It's like betting on the success of the entire economy, rather than trying to guess which individual player will win. For someone who found the stock market completely overwhelming, this simplified approach was a game changer, removing the fear of making the wrong choice. Long-term market perspective. He also emphasizes that the stock market is your best friend over the long term. It will have its ups and downs, but Collins teaches us to view market downturns not as a crisis, but as a sale, a chance to buy more shares at a lower price. Remembering this long-term perspective during rough market patches, when every fiber of your being wants to pull your money out, truly helps you stay the course and ultimately, it pays off as the market recovers. Conclusion. In essence, The Simple Path to Wealth isn't just a book about money, it's a guide to a richer, freer life. By adopting disciplined saving, ruthlessly avoiding debt, and embracing a simplified, long-term investment strategy, you can build a future where your choices are dictated by your dreams, not your bank account. Thank you. And if you liked this video, don't forget to like and subscribe.